I've got the management at Sutlej Textiles with us. Mr. Dilip Ghorawat is Chief Financial Officer with the company. He's with me here in our studio. Sutlej, by the way, doesn't get talked about that much. The stock has done well. It's up almost 65% over the last 1 year or so. It's a company promoted by Dr. K.K. Birla. Thank you very much, Mr. Ghorawat, for joining us. Good to have you here. Just talk to us a little bit about the company. I mean, it's predominantly a yarn manufacturer, right?
Yeah, thanks Prashant for inviting me. The company was promoted by Dr. K.K. Birla, and it is into value-added spun dyed yarn. The company is the largest manufacturer of dyed yarns in the country, having a capacity of 3.4 lakh spindles.
Dyed yarns, right?
Yeah.
So it's essentially, what is the difference between regular and dyed, yarn? And
see, there are two types of yarns. One is grey yarn and another is dyed yarns. The dyed yarns, we fiber the dye.
So it's basically value add.
Yeah, we add a value add to the product. The company is into niche products. And that is why the company's profitability has a sustainability with resilience going forward.
Okay. And where do you source raw material from, sir?
We buy cotton from Gujarat, Shankar 6. We buy polyester from Reliance. And also we use some quantities of recycled polyesters. We buy viscose from Grasim.
Okay. Who are your biggest customers?
We supply to Page Industries, Shivalik, Donier, Siaram, Arvind, Raymonds. All the leading textile manufacturers in the country source their raw material from us.
Okay.
As we are into value-added dyed yarns.
Okay.
We also manufacture cotton melange yarns, which is giving me an EBITDA of more than 20%. And we are the largest company of cotton melange in the country.
I was looking up the melange yarn, and that is essentially a blend of different colored fibers to develop various shades in the same yarn, right?
Yeah, we also do a mix of grey yarn and with some other fibers, which gives a total different product. In fact, this product was introduced by us in the country.
So you've got yarn, you've got dyed yarn, and then you've got what you call melange yarn, yeah?
Yeah,
right?
melange yarn. That
Right.
344,000 capacity, which I said, includes 106,000 spindles of melange yarn.
So melange yarn basically is value added from dyed yarn.
Yeah, it's more value added in the dyed yarn. It's a product of dyed yarn, and it's a more value added.
Okay. So what kind of contracts do you have for supply with all these leading players?
In melange yarn, we have a order book position of 30 to 45 days. And other dyed yarns also, we have a fairly good quantity of orders. We get regular orders from exports also. The export contributes about 26% of our total turnover. We also supply, as I said, to 40% of our turnover is to corporates. So we have a regular flow of orders.
No, so I mean, do they? So Page, for example, would say what? I mean, they'd give you a specific quantity that they need.
Yeah, they do. Yeah, they do give us those quantities, and then we supply to them. This is supplied from our plant in Jammu to Bangalore.
Sure. You have 2 plants, right?
We have 4 plants.
4 plants, sorry.
Jammu, Rajasthan, Himachal, and also we are into a value-added home textiles, where we are manufacturing curtains and upholsteries at Vapi, Bhilad. So that is also our forward integration into textile segment.
Sure. Could you break up your total revenues down for us and total profits as well for us? In terms of dyed yarn, melange yarn, home furnishings.
The revenue from yarns, the total revenue is about 95%, and 5%
from
is
yarn.
Yeah, from yarn business. 5% is home textiles.
Okay.
The profitability, well, 90% is again yarn business, and 10% will be in this home textiles. as we are doing a capacity expansion in home textiles, this should further improve.
Home textiles though would be much more profitable, right?
Yeah, it's more than 20% EBITDA, and we are into curtains and upholsteries. If the total capacity, the total production or the total market of the country is about 11% of the whole world, and this is having a CAGR of 8.3% in India. So there is a huge, tremendous growth in home textiles going forward.
Right. How do you sell these home textiles? I mean,
we are into B2B segments.
Okay.
We sell it to distributors. Further, the 25% of my home textiles is exported to Middle East and Mexico. We are now looking to tap US also.
You know, I have a research note. It says that your target is to increase export revenue to 50%.
In home textiles.
Okay, that is specifically for home textiles.
Home textiles, we plan to do that going forward. In yarn segment, it is about 26% of my revenues. We will also try to improve upon this. Reason is, as we are giving a value-added yarns, so people are, the mills and people are buying from us, the exporters and the local users also.
The other bit, in terms of yarn, it says that corporate customers are about 40%.
Yeah.
And dealers are about 30%.
Absolutely right. So that is why there is a regular flow of orders with the company. As I said, we supply to all the leading textile manufacturers in the country, which includes Page, Shivalik, Raymond's, Arvind, and plenty of others.
Sure. Can you talk a little bit about financials? I mean, what have you grown? What has been the growth, CAGR, top line, bottom line?
The CAGR, the top line growth is about 20% from last year. The EBITDA profit is about 15%. The PAT is about 20% going forward.
This is 16 over 15.
Yeah, 16 over 15. If I talk a CAGR, we had a 10% growth in last 5 years. The EBITDAs are about 20% CAGR of last 5 years. The debt equity has reduced drastically to 1:1.
Okay. I mean, if I look at say 15 over 14 numbers, there is about a 10% drop in EBITDA, right? So you did about 232 crores in EBITDA in 15. In 14, that was about 266 crores.
Yeah.
So there was a bit of a drop in 15 over 14. I'm just trying to understand, is it very cyclical?
No. Reason what has happened is we have acquired Birla Textile Meal from Chambal Fertilizers.
Okay.
That unit was giving an EBITDA of 8.5%. The balance EBITDA was giving more than 14%. So when I did a weighted average, it came to a lower of 13.5. The EBITDA of that division has improved in this year to around 12%. So going forward, we feel that this EBITDA should further go up for the company on the whole.
On the yarn side as well, is exports a big business?
As I said, export contributes about 25% of my revenues.
Okay.
And since we are into value-added dyed yarns, whichever customer has once buy yarn from me, he becomes addict to us, and the orders keep on flowing in the company going forward.
Who are your other big competitors, sir?
If I talk to dyed segment, there are RSWM, Sangam. But if I talk an overall business, it will be Vardhaman. We have KPR and
but dyed yarn specifically is RSWM.
RSWM and Sangam, but we are the leaders in this segment, dyed yarn.
I mean, is there any dyed yarn? You are the market leader.
Yeah.
By a big margin or?
Yes, we are. It's a very big margin. As I said, we are about 340,000 spindles. RSWM could be 150. Sangam would be 250,000. So this is why we have a lead in this segment in dyed yarns.
Okay. How will financial year 17 look over 16?
There are 2-3 things, factors affecting the economy. There is a continuous drought for last 2 years. The rural economy is stressed. As the company is manufacturing value-added dyed yarns, and we are looking at corporates, we are looking for exports, diversify the risk. So there is a continuous flow of orders. We hope there is a good monsoons.
Sorry, how does I mean, what is your dependence on, in what way, and how much is the dependence on, you said, rural India?
See, today the rural is 60%. And in case this rural economy starts buying...
Sorry, rural is 60% of what?
Of the world, of the India. Rural economy is 60%, staying in rural country. And if this buying, if there's a good monsoons and if they start buying, there is a trigger for demand in the textile division, which Sutlej will be a part because we are the first leg of India business. So this will further trigger the good demand for textile going forward. Secondly, the government has announced 7th pay commission, which will give good money in the pockets of the of its employees. There is an OROP coming in. So this all we feel will trigger a good demand for the textiles going forward.
In terms of people who buy from you, is branded apparel a big segment?
It's both. It's all mix. Branded is also there. As I said, we all leading textile manufacturers buy from us. So it's branded, non-branded, but it's a geographically mixed brand.
Okay. So going back to the question, 17 over 16, you think what kind of numbers can you do?
It should be a better one than 16. Because as I said, we should have a good monsoons. There is a good government policy on textile. There is Make in India concept. Government has introduced the 8 TUFs. Some textile parks have been coming in. Some recent developments have happened in the textile front from government. So this all factors and the monsoons will trigger a good demand for textiles. We feel better as compared to previous year. We should do better than going forward.
So you'll do, would you do say 105, 110 rupees in EPS in 17?
Well, it's too difficult, but yes, we should do a better one. Further, we are also doing
your growth 16 over 15 was about 20%, right?
Yeah.
Top line and bottom line at the net level.
Yes.
So should we expect better than 20 in 17?
We should expect, one more thing which I would like to add, the company is going for an expansion into Milan yarn of 270 crores. At Bhavani Mandi. The company is also ramping up the home textiles to 9 million meters at a cost of 88 crores. All this will commercialize in Q4 of March 17.
Okay.
This will also add value in this year 17-18 and 18-19. So I look at 3 years from now, the company should be doing excellent with a good CAGR numbers going forward.
Thank you very much for joining us, sir, Mr. Ghorawat. I appreciate you coming into our studios and running us through all of that. Thank you. Good luck.
Thank you. Thank you, Prashant. It was nice meeting you.
Thank you.